That's where we begin with Bitcoin and all of the crypto space seeing pretty massive swings over the past 24 hours, from down 18% to flat, negative once again right now. Bitcoin down to about 54,000 and change. Crypto's being seen by some as a risk gauge for the whole market. So let's talk about what's behind these particular sell-offs. Joining me now are CNBC's Kate Rooney and CoinShares Chief Strategy Officer Meltem Demirors. Welcome to you both. Meltem, we'll just start with you. I mean, do we have to, when a crypto's up, as much as it has been the past couple months, 10% sell-off is pretty garden variety, or what do you think? Is there something more going on here?
Yeah, absolutely. And great to have you back as well. It's been a fun time in crypto land. Certainly what we saw last week was a classic momentum trade. Going into the Coinbase listing, we saw a lot of activity in options markets and futures markets. A lot of traders went levered long, leveraging crypto very expensive. Coinbase did not have the outing we hoped for. There wasn't enough volatility to drive prices higher. People took off leverage throughout Friday. And then on Saturday night, between a 20-minute period, we saw a massive deleveraging, over $7 billion in options liquidated in a 20-minute period. So that obviously had an impact. But Sunday, we came right back with $80 billion of market volume in the Bitcoin space. Wow. So those dips are getting bought right back up.
So Kate Rooney, of course, as you know better than anyone, only in crypto right now do you get these 20-minute intense sell-offs that have erased, $300 billion in crypto market cap or something. So what do you hear today as the dust settles? Are there people who say, awesome, now I can buy in at 54, but I still wish I could have gotten in at 19?
Exactly. And great to see you, Kelly. Great to have you back. But yeah, only in crypto do you see that happen on a Saturday night into Sunday. So the market never sleeps. It's opened on the weekends. Of course, but that's what people are saying today. Meltem's exactly right. A lot of action in the derivatives market. That seems to have accelerated some of the losses there. But you are seeing a bit of a bottom. It's stabilizing, it looks like, around 55,000. Some might be coming in to see this as a buying opportunity. But one of the other data points that we saw from another blockchain firm, Glassnode, is that some of the wealthier buyers, so-called whales, were sort of stepping back at the same time as the retail buyers who were buying sort of smaller amounts, around $600 ahead of the Coinbase listing. Retail buyers were getting in, bigger investors were stepping back. So you saw this sort of shift ahead of Coinbase and a lot of excitement from the retail buyer there.
True. Meltem, the Bitcoin thing to me still makes a lot of sense because we've seen so many institutions getting in over the past 3 to 6 months. What about Dogecoin? I mean, this is like, so there's two phenomena here, right? On the one hand, you have institutional interest driving up Bitcoin. On the other hand, you have this massive retail interest that seems to be, as they've realized, driving up everything from GameStop to Dogecoin, you name it. I mean, am I describing it correctly, or are there more commonalities?
No, absolutely. Look, what we saw happen with Doge last week was pretty astounding. I think the catalyst there was the Wall Street Bets community. Ahead of the Coinbase listing, again, the Wall Street Bets moderators decided to, for the first time, allow talk about cryptocurrencies in that forum. Only 3 coins, though: Bitcoin, Ether, and Doge, of course. Then a day later, they reversed that decision because all the crypto folks went crazy in the forum. And so I think part of the response to that was retail retaliating, and really, TikTok investors made a song about memeing Doge to $1. And I think we see that playing out in real time here. It's